Hi, everybody. My name's Amanda Wusk with NIFA, and we want to welcome you to NIFA's Homeownership video series. We developed this to provide information and educational opportunities to current and future homeowners in recognition of National Homeownership Month. NIFA provides educational opportunities throughout the year in many formats. This year, we've had to adapt to our new social distancing guidelines and created this video series. We have many great sponsors and exhibitors that partner with us for our events, and we want to say thank you to Federal Home Loan Bank for sponsoring this specific video. With us today, we have Stacy from NIFA, and she is going to kick off this presentation today and introduce the speakers, and we'll go ahead and get started. Thank you.
Perfect. Good morning, everyone. Today we have with us Autumn Dillon from US Bank, and we also have Amy Otto, who is with Charter West Bank, and we just thank you ladies so much for participating with us today. Autumn is going to present first for us this morning and give us some information about myth busting. Thanks, Autumn.
Thank you, Stacy, for the introduction. And as Stacy mentioned, my name is Autumn Dillon. I'm a retail branch manager with US Bank Home Mortgage. And today we're going to talk about some mortgage myths and bust those myths about what you need for your down payment and for assets at closing. So we're going to start the call off today with what we do know about homeownership and affordable homeownership, specifically with homeownership rates in young adults. So since June is Homeownership Month, all of us on the call have the goal of helping you get into a home or maintaining your current residence. So we'll talk a little bit about homeownership rates in young adults, as well as one of the major obstacles that people or that we hear about from people in getting into a home for the first time, and that is the length of time that it takes to save. So we'll start first with the homeownership rate for those that are 25 years and under. As you can see, the lines in blue are from the year 2000. The lines in green are from 2018. There has been a decline in homeownership from 25 years and under across all demographics. So when we see these types of results, we look at it and we want to say, how can we help? How can we make homeownership more affordable for young adults? Let's look at the next page of demographics. So in this slide, it's from 25 to 34 years old. Again, you can see that there is still some decrease across the board for each demographic from 2000 to 2018, with the largest drops among Black non-Hispanics and white non-Hispanics. So when we speculate as to why this might be happening, one of the main things that we see and hear come up often is the length of time that it takes to save and money for down payment. So let's look at those average saving times on the next slide. So on average, it takes to save 3%, 5%, and 20% across the different races. On average, it takes 2.8 years to get 3% down. 5% down takes 4.2 years, and 20% down takes anywhere between 15 and 25 years to save that amount of money based on starting incomes, monthly net income, and the median house prices across the country. So with that in mind, I thought it was important to speak today to all of you about the myths around down payment. We don't want anybody waiting 15 to 25 years before they're able to achieve their goal of homeownership. So let's talk about that 2.8 range and some down payment assistance programs that are here to help. So some common myths that we hear. You need 20% down payment in order to qualify for a mortgage. Your down payment funds are the only funds that you need for closing. And down payment assistance or DPA programs only cover the down payment costs. So let's talk about myth one. You need 20% down payment. This is absolutely not true. We have programs as low as 3% down. So conventional loans that allow you to go to 3% down. FHA allows you to go to 3.5% down. And these And both conventional and FHA loans have down payment assistance options available for you. There are two programs that I didn't mention on here that actually don't require down payment. They're a little bit more specified, so we won't spend too much time on those, but VA does not require down payment for a veteran, as well as USDA or rural loans. I cover the Omaha market, and Omaha and the surrounding communities, the greater metro market, are not considered a rural zone. So we'll talk mostly about the conventional and the FHA products with those 3 and 3.5% down programs available to you. Down payment assistance, what the goal is here is to bridge the gap between what you have and what you need. So when we talk about cash to close on the next slide here in just a moment, we'll talk about the cash to close that you need for closing, and then we'll look at what you actually have when you come in and you see us, and we'll bridge that gap hopefully with the down payment assistance program. That is the goal there, to make homeownership more affordable for you. With down payment assistance, most down payment assistance programs have a minimum investment requirement of around $1,000. And so you'd be looking at bringing $1,000 instead of 3% of the purchase price, which is much more obtainable in a shorter period of time. So we'll move on to myth 2. For myth number 2, your down payment funds are the only funds you need for closing. Let's talk a little bit about that. What you actually need for closing is something called cash to close. Those are the funds you need to bring with you to closing. And those cash to close funds are broken down into 3 main types. The first is your down payment, and that's the one that everybody seems to know about. As we mentioned, that down payment would be 3% on the conventional loan or 3.5% on an FHA loan. And it's basically those funds that are required by the program you choose for down payment. The closing costs themselves is the second piece. And closing costs are, I'm losing my microphone here, hold on 1 second. And the closing costs are incurred to, basically the costs that are incurred to obtain your mortgage. So that's going to be what is necessary to get you from point A to point B. Point A being application, point B being closing. That's going to include your bank charges, any underwriting or processing fees, program fees, appraisal fees, title fees, credit reports, things like that. And then the third and final piece is prepaids. So prepaids are going to be your upfront property taxes, which are required for the land that your home sits on that you pay to the county. Homeowners insurance, which is what you would pay to protect your home against an act of God like flood, natural disaster, tornado. And then any other costs that you pay prior to closing. Some examples of that might be for home buyer assistance, education. It could be termite inspections, a home inspection on your home if you choose to do that, radon inspection, things like that. So moving on to the third myth, which is down payment assistance programs only cover your down payment. Most of the time, that's not true. Each down payment assistance program has their own rules and guidelines. However, most down payment assistance programs do allow you to cover those other 2 costs as well, prepaids and closing costs. The down payment assistance program will specify what the restrictions are on that, if there are any. And what's great about it is you can always, most down payment assistance programs will allow you to layer down payment assistance programs to help. So you may use NYFA's home buyer assistance program at the beginning to help with the down payment and some of your costs. And then you may look at using Federal Home Land Bank's assistance program to bridge the rest of that gap for you, and then bring that $1,000 minimum investment for yourself. So I hope all of that makes you feel like homeownership is much more attainable. You don't have to wait 25 years to save 20% down in order to be able to afford purchasing a home with some of the great options that we have for down payment assistance programs, and with programs as low as 3% down. The goal here for all of us on this call, NYFA's goal, my goal, Amy's goal, is to look at getting you guys into homes and making homeownership affordable for you with the great range of programs that are out there. We want to make sure you have a low, consistent fixed interest rate that we can offer longer terms, 10 years on an assistance program, for example, 5 years on an assistance program, and then 30 years to pay back that first mortgage to make that payment nice and affordable for you. We want consistent standards and requirements so it's easy for you to understand and you can feel comfortable purchasing a home. Provide access to credit education. NYFA's website has some really great people out there that offer home buyer education and credit education. That it's actually a requirement for their program, so you can go out there and start learning. More funds that are available to you for down payment assistance, making sure that they're available year-round if we can, and always looking to onboard new programs to our arsenal to be able to offer to you. And then lastly, as loan officers, myself, my team, Amy, and several other loan officers across the great state of Nebraska, we are all looking to provide support and guidance and education to you. We know how important homeownership is, not just to you, so you can start investing in your future, but also for the community. People who own homes are better community members. Kids who live in homes do better in school. We want to get all of you into homeownership, and I hope that these myths that we broke today for you, that we busted for you, help you to feel like that is more attainable for you today. And I'll pass it back to you, Stacy, and I think Amy's going to hit it off next.
Thank you so much, Autumn. I loved your presentation. Sure. So next on our agenda, we have Amy Otto with Charter West, and I will let you take it away in telling people how they can go about applying for a NYFA loan with homebuyer assistance.
Okay, perfect. Thank you.
Thanks, Amy.
So my name is Amy Otto. I'm with Charter West National Bank. I'm in their mortgage center in Grand Island. So, what I see is a little different than what Autumn sees in Omaha. We do a fair amount of USDA loans. But right now we'll talk about, the process for how to get these NYFA loans and how to get you some down payment assistance if that is something you need as well. So if you go to NYFA.org as a borrower, there's lots of things for you to look at on there. There's lots of good information. You can search for a participating lender in your area. There's also real estate agents on there who are NYFA specialists. They've taken a class. The lenders have taken a class. We know this program inside out. And as far as eligibility goes, you can go and check and see what they have, what's called a 3-year rule. And if you haven't ever owned a home, you're considered a first-time home buyer. If maybe you have owned a home, but it's been more than 3 years, you're considered a first-time home buyer again. There are other ways, and in the instance of a divorce, if there was a property and the property settlement, your spouse got the divorce and you got no proceeds from that, you could take advantage of this program again. Also, if you're a qualifying veteran, you can take part in NYFA's programs. You don't have to be a first-time home buyer. Another way around that is for forced job relocation. So if your company has moved you and you were in a first-time home, you were in a home before, not necessarily a first-time home buyer program, but you move, you could take advantage of that as long as you were under their income limits and met the requirements for that. Other information on there is income limit. So when we talk about income limits, we're not talking about what your income is alone. So if you live in the house, the loan is going to be in your name only, but you have perhaps your parents living with you. I see that a lot in my community. Or your siblings are living with you, a boyfriend, anybody else who has income. They're going to take into the consideration everybody's income, even if those folks are not on the loan. And the reason that's important for you to know is because if you're a household of 1 to 2 in my area in Hall County, those income limits for a 1 to 2 person household are $78,100. If you're 3 or more, that goes up to $89,815. So the limits are fairly high. I don't feel like they're super low. Most people that I talk with that are first-time home buyers do qualify in those ranges. The thing to consider is your credit. So credit scores for this program are 640 minimum. And with that, there's debt to income ratios that come into play depending on where your score is at. So if you're 640, your income and your debt in relation to that income can only go up to 45%. If your credit score is 660 or higher, we may be able to go up to 50%, just depending on the loan program and the situation. And the other thing you're going to want to do while you're on there is check out their homebuyers education, because that is a requirement of this program, is that anyone on the loan takes a homebuyers education course. There are options on there for you. You can pick which one you want to take. And there's also options on there, at least 2 of them have bilingual classes. So if Spanish is your first language, you know, that'd be an easier course for you to take, obviously. Okay, and then on getting pre-qualified. So once you've gone through NYFA's information on their website and you're ready to get pre-qualified, you found a lender that participates in this program, you want to call, set up an appointment with your lender. And it's good if you know things when you come to that appointment. So a lot of times we have people come to the appointment and we'll say, well, you know, what's your hourly rate? How many hours do you work? And that can be a little tricky for some people. Sometimes they don't know exactly what their rate of pay is. You know, they work overtime, but they've never really considered how many hours they work. And that's all taken into consideration. So it's helpful if you do know that when you come, or, you know, if you can bring the pay stub with you, great. That's super helpful. Also, as a lender, I want to know what payment you're comfortable with, because you might qualify for a lot more than what you're comfortable with, but that doesn't necessarily mean that we want you to purchase that higher amount just because you qualify for it on paper. I want you to be comfortable with your payment, because it is no fun to be house rich and money poor. We want you to be able to do other things, not just sit in your new level home. And then when you come to that appointment, we are going to go over everything. And on the next slide, we're going to go over income for everybody's income in the house. So it's easier if you come and you're upfront about, yes, mom's living with me, she works part-time, dad's living with me, he works full-time, because if we find these later on bank statements that there's another person's income and we have to ask questions, that sometimes throws you over that income limit, and then we're scrambling to figure out how to get you into another home loan that you qualify for, and possibly that there wouldn't be any down payment assistance. So it's just easier if we know that up front. And assets, we're going to go over bank statements. We're going to go over if you have 401k, if you have health savings accounts. You know, we basically want to know everything, because interest is counted as an asset. And also, you know, we need to know if you have assets, if you have the money for the down payment, or if we want to get you into the home buyer's assistance loan. We're going to go over credit. A lot of times folks will come in and they may not have their score where they want it to be, where we need it to be for the NYFA program. So we can always look at that and kind of guide you into what you can do to get your score up. Sometimes it's a really simple fix. Sometimes it's something that's fraudulent on your credit report. Sometimes it's an error that someone has reported on there. But we'd rather guide you on what to do and have you fix it and come back later when we can qualify you. We don't ever mean for it to be discouraging. We just want to help you get into it. And then we're gonna, once we know income, assets, and where your credit score stands, and how much your monthly debt is, we're gonna look at how much you qualify for. And that's a tricky question too, because people come in and they want to know, well, I want to know, you know, how high can I go when I go look at houses? And I can give you a range, but it's really hard to tell you exactly, you know, you're going to look at houses at 180,000 or less, because taxes and insurance vary so much, and that's a big part of your payment. So if you're looking at houses at 180, but in one part of town the taxes are only $2,200 a year, but on the other side of town they're $4,400 a year, that's going to affect your payment and what you qualify for by quite a lot. Okay, and then once you get pre-qualified with your lender, there's things that we don't want you to do. And these, I can't express enough as how important these are. Don't change your job or quit your job. If this stuff all has to be verified, and it has to be verified before we can close on your loan. So yes, we're going to verify it in the beginning when we have you sign papers and start the application process, but we're also going to verify it right before you close. So if we call your job or where we think you're working and they tell us, no, he left the job last week, we're not probably going to be closing within the next 30 days. And cash, when you deposit cash into your bank account, we have to verify where those funds came from. So if we see all these large deposits of cash, we have to question it, we have to document it, and explain it. So it's easier if you don't do that. Let it sit there, let it season in your account before you apply. Mattress money at home, that doesn't work for this. It all has to be documented funds. And try not to make any large purchases while you're in the middle of this process. Don't go out and open a Nebraska Furniture Mart account to get new furniture for your new home. Wait until after you've closed if you want to do that. Don't co-sign on any loans for anyone, because we do have to count that payment as one of your monthly debts. And try not to change banks. That's not something we really normally see. Applying for credit, that goes back to the, applying for furniture, for a credit card for furniture. Don't do that, because we're going to be able to see that on your credit report, and we're going to get a notice from our credit bureau that says, hey, somebody's been looking at their account, there's an inquiry, and then we're going to have to ask you if you opened a new account. If you did, we need to document the monthly payment on that to make sure that you still qualify for your home loan. So it's just easier if you wait until after the closing to make those large purchases. Don't close any current accounts and transfer money, because if we verify funds to close off of what you told us in the beginning, and then we go to verify those and that account is closed and there's no money, we're kind of back to square one as far as getting that. And we do need, normally we need a 2 months of bank statements to show funds. So that could also put your closing on hold or cancel it if the seller isn't willing to wait for that. And as far as NYFA programs go, the first home program, you have to have that credit score of 640 minimum. The rates they're low rates. There's a little bit different for if you need down payment assistance and what your loan type is, but generally we're looking at 3 1/8 to 4%. And that's from FHA to conventional or USDA. And it's a 30-year fixed rate. You can pay that loan off early. There's no prepayment penalties on that. You can come with a very low down payment and sometimes not even anything at closing. There's $1,000 minimum investment in that, but a lot of times that's met with the earnest money you give to your real estate agent and the application deposit that your lender may or may not require. You also, if it's a mortgage insurance on the loan, conventional, that's private, that's going to depend on what your credit score is. For FHA, that's a set rate, and it's a fairly low rate. So that is always helpful. That mortgage insurance isn't to be confused with your homeowner's insurance. Mortgage is something more on the lender side of it. And you, just like we talked about earlier, you will take the home buyer's education class for all of these NYFA programs. And approved lenders. So on any of these loan types, you're gonna want a NYFA approved lender. And then for the home buyer's assistance, the down payment assistance is up to 5% of the purchase price, up to $10,000. We can't go over $10,000, but if it's a $100,000 house, they can help out with $5,000. And how they do that is the second mortgage. So let's say it's $5,000. You're going to have a 1% interest rate on that, and it's going to be a 10-year note. And just like we said before, the reduced out-of-pocket expenses as little as $1,000. So we've actually had borrower this week come to closing with $7.82, and they were super pleased with that. And then the military home. So currently the interest rate on the VA loan is 2 7/8. Qualified veterans are exempt from the first-time home buyer rule. And there is the home buyers education class on that as well, like there is on all of their programs. And after you've met with your real estate agent, you guys have looked at houses, you've found the one, you know, your offer's been accepted, what are you going to want to do? You're going to call your loan officer, make an appointment to sign those loan documents. Home inspections, if that's something you want, you're going to want to get that ordered. Homeowners insurance, it's great if you can get that lined up and at least get your lender an estimate so that we can add that into your payment and get you into underwriting with that correct amount in the beginning. Title insurance, your real estate agent or yourself, depending on if it's a for sale by owner, you'll want to get that title insurance ordered. And that's just to protect you. They check to make sure there's no liens on the property, that somebody could come back on you as owing those. That would have happened prior to you owning that property. And then documents. So once you have this, this is when we need your assistance. We need you to get the documentation for the file so that we can show the underwriter that, yes, you qualify income-wise. Here's their 30 days of pay stubs. Here's 2 months of bank statements. They have the funds in their account. Sometimes this can be a gift at closing from a family member. We have to document that as well, gift documentation, and sometimes the donor's bank statement to prove that they had the funds in there for you. So, but it is really, really important if your lender asks for something to get that to them as soon as you can so that we're not delaying the closing possibly. And then after closing. After closing, the title company is going to file the deed of trust at the courthouse. It says that you're the owner of that property and that your lender was the lien holder on that property. In the next 45 days or so, you should receive information, and that'll be from US Bank. And it's a welcome packet. They'll let you know where you can make your payment, whether it be local, you can pay online, you can make your payment through the mail. And then we just want you to enjoy your home and call us with any questions or concerns. What we find a lot here is once that deed of trust is filed with the courthouse and that becomes public record, we do have people calling us and saying, hey, I got this in the mail, I don't know what it is, but they're asking for money. So these are fraudulent things, and unfortunately, because that is public record, people can go down there and pull these, see who bought a house and start sending stuff. The most common two we see are for a certified copy of your deed of trust to send them money and get that. You don't need that, and you have a copy of your deed of trust already. There's no reason for you to get a certified. The other one we see is it says that their home warranty has expired. Around here in this area, home warranties aren't super common, so chances are you may not even have a home warranty, and it certainly wouldn't have expired within the first 3 months. So our goal is to get you in that house, and with a little bit of cooperation and a NIFA specialist for a real estate agent and your lender, we just want to make this an easy and a smooth process.
That is perfect. Thank you, Amy. I know when I was a first-time homebuyer, I certainly wish someone would have given me the same advice that you gave today. There was no one around at that time.
No.
So I do very much appreciate what information you shared with our group today. And Autumn, if you are out there, I have just a couple of questions that I was going to add. There you are. I have a couple of questions
Hello.
I just want to toss out to you ladies just to help with our first-time home buyers that are tuned into this. One question for me is, what other down payment assistance programs are available to buyers outside of NYFA's home buyer assistance program? I'll let either one of you go.
The one we see is for Federal Home Loan Bank. They have a grant up to $5,000, but the income limit on that program is quite a bit lower than it is for NYFA's program. So it's great, you know, if we can get you in it, we certainly will, and then we'll still use, you know, the first time home program through NYFA without lower rate a lot of times for borrowers.
Perfect. Perfect.
Yeah, there's several approved down payment assistance programs across the state of Nebraska. I know Norfolk has some specific ones. Up in Washington, Dodge County, they have the Three Rivers Housing up there. Even over in Pottawatomie County, I know not necessarily on the Nebraska side, but they have some down payment assistance programs there for the greater metro area. And then the First Down program is another one through Nebraska Housing Developers. And then NeighborWorks also has some great programs in Columbus, Lincoln, and Norfolk as well that offer some great down payment assistance programs. So they're definitely out there. Usually they have to get approved through the lender through a lender to offer them, but they are out there. They are available. A quick Google search will certainly find some that are located in your area.
Perfect. Thank you. Tell me one thing that you hope first-time homebuyers learn from the homebuyer education classes that NYFA requires.
My hope for them is that, you know, once they've taken that class, that it doesn't seem like it's a scary process. Because I think people come in to get pre-qualified, and I think they come in and they're like, we don't think this is going to help us right now, but if you could help us get us there. And a lot of times we send them away with a pre-qualified letter. You know, it doesn't have to be a scary process. So I think, you know, if they go to the NYFA.org website, get the homebuyer education options, and just take that class up front, I think that would ease a lot of people's.
And those certificates are good for a year from the time that they take those. So that's good information also. Always good to get those done early. What about you, Autumn? Anything that you wish that they would learn from that?
Yeah, I would add to what Amy mentioned in her presentation, and that is, I hope that from that they learn a budget plan, because I just think that that's so important to understanding not only what you can qualify for, but what you can afford, because those are two very different things. So you might be able to come in and I can, you know, qualify you for a $150,000 house, but 120 is what that comfortable monthly payment looks like for you. And it's really, really helpful when someone comes in and they say, these are my expenses every month. This is what I can afford for a mortgage payment, because that helps me guide them into something that's sustainable for them and not something that's going to be very challenging once they get into that home.
That's good. That's good. The last question I'll ask, because I know we're getting close to time today, and I cannot thank you both enough for the excellent information that you've shared today. But the last thing I would say is, what is the best piece of advice you could give to someone thinking about purchasing their first home?
For me, it would be to save up some funds if possible. You know, it's easier to get you approved if you have money saved already and we're not scrambling or having to have you buckled down during the process to try to save these funds. It's easier if it's saved up front.
Yeah, I would just add, if you can ask questions, that's really helpful. I think an educated home buyer or an involved home buyer is more comfortable with the process, more confident in the process, and it just makes things go smoother throughout. It can be, for most people, the biggest purchase of their life, and so it can be a little bit stressful going through the process for a lot of first-time home buyers. The more questions you ask your loan officer, the more we can put your mind at ease and make it a more enjoyable experience for you.
Perfect. Perfect.
So ask questions. Don't be scared. We're not scary people.
Right. That's right. Your loan officer is your friend. I really, again, thank you so much for the information that you shared today. And I'm going to turn it back over to Amanda.
All right. Thanks, ladies, so much. This was such helpful information. I know I bought my first home, almost 3 years ago, and I did not have this type of knowledge and education before that process. And it was scary. So as long as we can continue to educate and show people that there are ways to be comfortable going into that process, I think we're doing some great work here. So I just have a few closing statements here. We want to wish everybody a happy homeownership month. We encourage you to check out all of our videos that we have recorded and posted out on our Facebook page for the month of June. There are 8 total videos out there. Our Facebook page is NIFA Housing. If you check out the videos, all you have to do is like and comment on the video and you're entered to win some amazing prizes. All of our rules are posted out there as well for you to take a look at. But other than that, I want to say thanks again to you ladies for providing this information today and for supporting first-time home buyers throughout Nebraska. Have a good day, everybody.
You too.
Thank you.